Hello, my name is Judy, and this is assignment 4.3, Data Patterns Capstone Update for my company, which is Lufthansa. This shows Lufthansa stock over the last 5 years. It hit a high of $28 in January of 18, and then due to the pandemic, it hit a low just recently last May of $7. You see previously, prior towards the high, it also had some lows, so we'll talk about that as we continue on. So what are we talking about with the rise of 2017? Well, everything seemed to be in favor of Lufthansa or for Lufthansa at the time. There were some bankruptcies in the stiff competition in the area or Europe. There are a couple airlines that went bankrupt. Lufthansa took opportunity and seized some of the assets and took control of some of the networks. So that was in favor, less competition, and also at the time, lower fuel costs. So all that was working for them. Then you hit 2018, 2019, there was a steady decline because a lot of these uh, uh, positives started going against Lufthansa. So persistent overcapacities, aggressive competition, and increasingly price-sensitive demand continue to pressure yields on the European routes of network airlines and Eurowings, particularly in German and Austrian home markets. So you had the introduction of a lot of low-cost airlines, some pricing wars. Everybody was trying to fill the voids of those previous bankruptcies. And then also during that time period, increased fuel costs. Fuel costs are expected to be 850 million higher than in 2017, and that's a big chunk when you have low operating margins compared to what they saw previously. When we look at revenue and earnings per share from 2017 to 2019, again, there has been some rises and falls. Revenue and profit, you can see, have actually increased steadily, so that was a big positive. Total revenue went from 35.58 billion to 36.42 billion. Profits increased over that time period, but again, going back to fuel costs jumped from 2.4 billion to 4.2 billion, which caused an overall decline in the net income. Okay, so net income, or the bottom line, there's some money lost there. Earnings per share from 2016 to 2019. The big year was 2017, and that rise we're talking about, and then the slow, steady decline. 2019, it went pretty low, and then nothing compared to 2020 and what's been happening with the pandemic and global shutdown. So it's actually expected to be a negative number this year. The minus 4.79, that's the trailing 12 months expectancy, and it's supposed to be like that for the rest of this year. Next year it should flatten out and then start an increase. With the SWOT analysis, starting out with the strengths, Lufthansa is in a good shape as far as a good structure and a good company. They have high expectations and they try and keep that. They were ranked 9th in 2019 for top airlines in the world by Skytrax. So yeah, the top 100 airlines, and they were ranked 9th. So that's pretty good. They have a solid route network in Europe with expanding routes elsewhere. They're a member of the Star Alliance. So the Star Alliance is just a group of 28 other total airlines offering more than 18,000, almost 19,000 departures per day and connections to 193 countries. So they have partnered up with other airlines to provide these services. And again, that's another strength for them. They, at the time, and I'll show you a future slide, the total passenger traffic has been on the increase before the pandemic, and hopefully once this is done shortly, you're talking the next year or two, things will start turning around, kind of reversing course back into the positive. Business performance was also great. And then lastly, a strength due to the with COVID and everything. They're backed by the German government. They were just provided a $10 billion bailout in exchange for 20% stake. So this company is not going to fail. They kind of hit the bottom on what is expected, just like other airlines are supported up by their home governments, and they're represented, and they're not going to be allowed to completely fail. So that's a strength there. For weaknesses, liquidity position. With everything going on, they have limited cash on hand to fund opportunities or fulfill payout obligations. Operating performance, and compared to, there's a very thin margin here with these airline companies and in the transportation industry as a whole. There's a little bit lower than their close competitors, such as like Delta. Lufthansa was at 7.8% versus 11.8 and 15.1%. So operating performance there can be some efficiencies that can be gained. And then again, susceptibility to fuel costs. Also thought I put that in the threat column, but there's got to be a way to try and figure out some ways to negate those costs. And then again, dealing with the pandemic, being prepared as a company for these up and downs. Opportunities, growth prospects. Aviation industry as a whole was increasing. You can see the bottom left graph, or not graph, but visualization. Passengers on U.S. and foreign airlines in 2019 was 1.1 billion overall, and that was up 3.9% previously, and then over the last 2 years up 9.1%. So it's been steadily increasing. The right visualization shows all the way back to 2003. The red line is the total number of passengers in millions, and from 2003 you had 701 million. It had an increase and then a slight decline in the recession in 2008, and has steadily increased overall since then, and that trend is going to continue. So other opportunities are the expansion of the route network, the growing global travel and tourism, and growth industry initiatives. So increased aircraft investment into AI for predictive behavior, and expanding that STAR alliance. Continue on with those expansion opportunities. Lufthansa is mainly based in Europe. It has a good market share there. In the graph on the right, you can see your visualization, the percent of flights throughout the world. A big opportunity is going to be Asia Pacific area with India and China. Those are two of the top 3 growing travel industries in the world, and that should be taken advantage of on the back end of what's currently going on in the world. So China had the largest growth in passenger journeys in 2018, and that was continuing in 19. India's air transportation sector estimates that air passenger numbers to and from within India to increase by almost 3.5% over the next 20 years to over 500 million passengers per year. So there is a big opportunity for expansion into the Asia Pacific region. Threats. So some threats here to the company. The airline industry is a highly regulated system or series. You can see here with all the different countries or organizations, they all have some type of overlook capacity. For the United States, it's the FAA and Department of Transportation. European Aviation Safety Agency for Europe. Japan has Civil Aviation Bureau. Japan has their own, and then you have China. China's a huge one, the Directorate General of Civil Aviation and the Civil Aviation Administration of China. So all of them have these different regulations on crew rest, how many time zones you can go across, maintenance schedules, etc. So those have to be looked into, and that's a threat because all those more rules equals more cost. The next thing, foreign currency fluctuations. 37.8% of its total sales from non-European customers in fiscal year 2018. So the world kind of the world economics are kind of in sync with each other, going up and down, but you have regional instabilities, and those can affect and pose a threat to Lufthansa into their expanding networks. Intense competition. So their main route structure is in Europe, and there are a lot of different aviation companies within there, and they're fighting for each passenger, and then same thing, trying to expand. So the competition is intense. And then going back to the fuel charges, the one visualization here on the bottom just shows the variation in fuel prices from price per barrel all the way up to almost $134 per barrel. Then you had that drop, and it started coming back, and then you can see on the far right of the visualization how it completely dropped due to the pandemic. But eventually that's going to start increasing as people start moving again. So overall, what's the outlook? What are we talking about? Well, once we get past this current situation, increased flight travel, the statistics are all there. It's going to be increasing dramatically, and luckily there is the current network in place for that demand. But Lufthansa needs to be ready to expand for the future. So that includes, again, buying new efficient aircraft, decommissioning older aircraft that are less efficient, higher maintenance costs. There's also going to be the rising fuel costs, so they need to look into ways that they can mitigate that. But anyways, lastly, with the bottom line, there needs to be ways to streamline cost to help with the bottom line and increase those margins. So overall, everybody's in a slump right now, but the outlook for Lufthansa is good. Just need to hold on and get past the current situation. Here are the references, and that is my presentation. Thank you and have a great day.